Your 30s can be a transformative decade, full of opportunities, responsibilities, and decisions that can shape the rest of your life. But with these opportunities come potential pitfalls, especially when it comes to managing your finances. Whether you're starting a family, buying a home, or advancing in your career, the financial choices you make now will have lasting consequences. Welcome to Forever Finance, where we want to live our lives our own way. Mistake number 1, not having a financial goal. One of the most significant mistakes you can make in your 30s is not having a clear financial goal. Without a destination in mind, it's easy to drift through life without making real progress. Whether it's saving for a house, building an investment portfolio, or planning for early retirement, having a specific goal gives you direction and purpose. When you set financial goals, you're more likely to make decisions that align with your long-term vision. It helps you stay focused, prioritize your spending, and measure your progress. Without a goal, you might find yourself spending aimlessly, missing out on opportunities to grow your wealth and secure your future. Take some time to think about what you want to achieve financially in the next 5, 10, or 20 years. Once you have a goal in mind, create a plan to get there. This could mean setting up automatic transfers to savings accounts, adjusting your budget, or exploring investment options. Remember, a goal without a plan is just a wish, and your 30s are the time to turn those wishes into reality. Mistake number 2, ignoring high-interest debt. High-interest debt, like credit card balances, can be a significant burden in your 30s. It's easy to get comfortable with the idea of carrying some debt, but the interest payments can quickly spiral out of control, eating into your ability to save and invest. The best approach is to tackle high-interest debt as aggressively as possible. Consider using methods like the debt avalanche or debt snowball to systematically pay down what you owe. The sooner you can eliminate these balances, the more money you'll free up for other financial goals. In addition to the financial strain, ignoring high-interest debt can have a negative impact on your borrowing capacity, which affects your ability to qualify for mortgages or other loans. A poor borrowing capacity can result in higher interest rates on future loans and may limit your financial opportunities. By prioritizing debt repayment, you're not only improving your financial health but also building a stronger future profile, which can save you money and open doors in the long run. Mistake number 3, failing to build an emergency fund. Life is unpredictable, and without an emergency fund, you could be one unexpected expense away from financial disaster. Whether it's a sudden job loss, a medical emergency, or a major home repair, an emergency fund acts as a financial safety net. Ideally, you should have 3 to 6 months of living expenses saved in an easily accessible account. This fund can prevent you from going into debt when the unexpected happens, and give you peace of mind knowing you're prepared for life's uncertainties. Without an emergency fund, you may find yourself relying on credit cards or loans to cover unexpected expenses, which can lead to a cycle of debt. This financial vulnerability can create stress and anxiety, especially during uncertain times. By establishing and maintaining an emergency fund, you're not only protecting yourself from financial shocks, but also giving yourself the peace of mind to handle life's challenges with confidence. It's a key step in building a solid financial foundation. Mistake number 4, not investing in your career. Your 30s are a crucial time to invest in your career. Whether it's gaining new skills, pursuing further education, or even considering a career change, now is the time to position yourself for long-term success. Staying stagnant in your career can lead to missed opportunities for promotions and raises. By actively working on your professional development, you're not only increasing your earning potential, but also securing your financial future. Failing to invest in your career can also lead to job dissatisfaction and burnout. Without continuous growth and development, you might feel stuck in a rut, which can impact your motivation and productivity. By actively seeking out new challenges, expanding your skill set, and networking within your industry, you're not just increasing your earning potential, but also enhancing your job satisfaction and career longevity. A fulfilling career is not only about making money, it's about finding purpose and enjoying the journey. Mistake number 5, overextending yourself financially. It's tempting to upgrade your lifestyle in your 30s, especially as your income grows. But overextending yourself financially, whether it's buying a home you can't truly afford, taking on too much car debt, or overspending on luxuries, can leave you in a precarious financial situation. The key is to live within your means and avoid lifestyle inflation. Create a budget that aligns with your financial goals and stick to it. Remember, just because you can afford something doesn't mean you should buy it. It's essential to balance enjoying life now with planning for the future. Overextending yourself financially can also put a strain on your mental and emotional well-being. Constantly worrying about making ends meet or keeping up with payments can lead to stress, anxiety, and even relationship problems. Financial overextension often leaves little room for saving or investing, which can hinder your long-term financial growth. By setting realistic financial limits and making mindful spending decisions, you can maintain a healthy balance between enjoying the present and securing your future, ensuring that your financial choices support your overall well-being. Your 30s are a time of growth and opportunity, but they can also be a time of financial pitfalls if you're not careful. By avoiding these mistakes, you'll be setting yourself up for a secure and prosperous future. Check out this video to learn more about the day-to-day financial mistakes to avoid.